Okay, I want to expand on the inverse ETF. We already did a video on that. ETF stands for Exchange Traded Fund. Remember that indexes have been with us for a long time. You could have the Dow Jones Industrial Average, which is an index, the S&P 500. Problem is those all trade once a day after market close at 4 o'clock. The Exchange Traded Fund can trade at any time during the day, buy, sell as much as you wanted to. And when you have that kind of trading capacity, you create liquidity. And with the liquidity, Wall Street realized that they can actually go inverse on these ETFs. Inverse meaning when we think an investment is going to go up, an asset's going to go up, in the option world, you can buy a call to take advantage of that. If you think an asset is going to go down, you buy a put to take advantage of that. So the exchange traded funds are just simply using fundamentally short-term puts. Why is this important? In our trading platform, our managers hedge one of three ways. And we did a video on this about the two restrictions that money managers have that hurt you in down markets. So you should watch that video if this is new to you. We hedge by going to cash, using alternate asset classes, and the big one is what this video is about, is doing inverse. So as an example, the best way to do this is we're going to look at the QQQ, which is the index for the NASDAQ 100. So I simply just went to Yahoo Finance. You can do this on your own. The symbol is the QQQ here, and you can see now today's January 20, 2016. The Dow is down over 400. The NASDAQ is down 150. The S&P is down over 50. Let's look at the profile, the fund description for this. So you can see the fund summary. The investment seeks investment results that are generally correspond to the price and yield performance of the index. What's the index? Well, it's the NASDAQ 100 index. That's what this is trying to mirror. So you can see it's down 3.2%. Now, let's look at the inverse ETF, which is the ProShares Short QQQ, or the symbols PSQ. And you can see that it is up 3.13%. And if we read the fund summary together, the investment seeks daily investment results before fees and expenses that correspond to the inverse -1x of the daily performance of the NASDAQ 100. So it's pretty simple here. Up 3.03, down 3.03. Now, notice the 1x. That means it's going to go down 1 times. Now, you can get an ETF that goes down 2 times. So let's take a look at that. And that is the ProShares Ultra Short. QID is the symbol. Let's look at what it says here. Investment seeks daily results for fees and expenses that correspond to 2 times the inverse, 2x. And so this should be up fundamentally double what the market is down. So the market here, this is all live. You're seeing this. It's down 2.89. It's up. You take that inverse times 2 and you're going to get 5.7. So hopefully this makes sense. I wanted to show you a live data feed, particularly on a day where the market is struggling significantly. To go and see the other videos, go to thebrinkman.com and subscribe to this channel for further videos. Thanks for watching.